Hi, everybody. Good to be back from spring break. Welcome to the weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. First market we're going to take a look at is going to be the Australian US dollar. Hey, Aussie dollar is looking pretty strong here. Overall, you're in a secondary sell zone, by the way. Keep that in mind. You're coming up on a 618. However, all these short-term patterns are still higher, so we're still in the buy the dip camp. As a short-term trader, as an intermediate-term trader, you're definitely buying the dip. That would be as a day trader. As a swing trader, you're still looking to buy dips. You want to trade with the majority of patterns. I think our RTT ratios are pretty telling right now, and you're going to see a somewhat familiar pattern here in the Aussie. There it is. All these short-term guys are up, but these longer-term patterns are still down. So generally when you get that, you get a bit of a dog fight at that secondary resistance, and that's why we've marked that 618 there. There you go. Good resistance in the Aussie at the 93.46 level. On the other hand, resistance tends to be like a magnet. It tends to get there, and then it tends to be price tends to be repelled away from it. So we'll see if price does get there. Short term, we still like buying dips in this guy. Aussie on a pretty bullish footing. Next market, the Swiss franc, the dollar Swiss. So many times rather than look at the chart, I just prefer to look at the raw numbers. I look at my RTT ratio because it tells me so much. Here's that familiar pattern. Short-term patterns are up, long-term patterns are down. Nothing new here. If you look back historically, anytime you get that 5, 10, 25 going up, as a short-term trader, you'd be looking to buy dips, but on the other hand, boom, you hit that 50 or that secondary. And here you can see it on the chart. How many times have you put in lower highs, lower highs, lower highs? So, this guy's still lower highs, and I don't see much here to get excited about. The Swiss franc tends to move in the same direction as the dollar index. To me, the dollar index looks a bit more exciting than the Swiss franc. So that being said, let's move right along. The dollar index, and I'm like a broken record here. Long term, this is a good looking chart. Now this is a daily chart, and let's cheat. Let's go to the brains of the operation, our RTT ratio. There you see it. There's that familiar pattern. Short term, it's up. So here's what's cool. If you generally we teach you take any you take any three consecutive patterns and you trade with the same directions as the majority of patterns, right? So if you're trading if you trade the 5 through 25, you're buying dips. If you trade even the 10 through 50, you're buying dips. Starting to get interesting here. Dollar index, I like it. I've been saying that for a long time. But here's what's really cool about the dollar index. You guys, this is a bullish chart. The primary pattern is still bullish, right? You still have a long-term pattern of higher lows. You still have a long-term pattern of higher highs. So dollar index, long-term chart, this is a snapshot of a bullish primary pattern. So despite recent dollar weakness, despite the dollar lagging, the primary pattern is still bullish. Very, very exciting. Let's take a look at the euro now, which generally is going to be the mirror opposite of the dollar index. We'll pop down to a daily chart. This is a level just below 140 we've been looking at for a long, long time. That's our risk tolerance threshold level. You finally got there. You got rejected. So to me, this is a pretty interesting chart because you hit that long-term resistance and it held. But rather than look at the chart, which can sometimes be a bit of a confusing there, we always see what we want to see in a chart. That's why I like to break down the raw numbers. I like to break down the individual patterns. Here's my Euro US dollar chart. Very important, that long-term primary pattern is bearish, similar to the long-term primary being bullish in the dollar index. But here's what's interesting to me. If you trade the 5 through 25, you're selling rallies. If you trade the 10 through 50, you're still selling rallies, right? So I like the position the euro's in now. We'll definitely be looking to sell rallies. Normally, when I see a doji like that, a little hammer, see Friday's candle, it's a green candle. Normally that's somewhat bullish. Look at that right there on the middle of the Bollinger Band too. Normally I'd say, yeah, that's somewhat of a bullish development. This time, however, Fridays tend to be counter trend, so you almost expect a counter trend rally on Friday, which is what you got. If I drop down to a 4-hour chart, I like resistance. I'd be looking to sell rallies around Friday's high, which is going to come in right in here or so. So I think you'll see resistance in the euro from 37.75 or so to 38 even. So I'm going to take a look at that, and if you start to see weakness in that market at those levels, I'd be looking to sell a rally in there on the approach to 138 even. Pretty familiar pattern to us, however, in our RTT ratio. Hey, shorter term patterns are down, longer term patterns are still up. So, something's got to give way. And you're seeing a pattern here in all these markets where, the 10-year note, same thing. Shorter term patterns are down, but the longer term guys, the 50-day, still kind of wrestling with it. So familiar pattern, U.S. stock market here, you see short-term patterns down, yet longer-term patterns are up. So, generally that the trend there has been, they shift all the short-term patterns down, suck short-term traders into getting short, and then the long-term pattern holds. So, we'll see. It's been the same formula in the euro too. That's why what happens this week is so important to us. Does the euro continue lower and actually shift this secondary pattern or not? So exciting week. I had a great week off. It was so nice to be off, but it's even better to be back. And we'll see if we get things changing. Hey, next market is gold. I'm just going to pull the gold chart down. Gold, pretty interesting because you're on long-term support here. You have a confluence of support here. You have the 50% retracement of the overall move, and then you have that RTT, that shorter-term RTT ratio there. So gold's going to be an interesting one to watch. Here's the RTT. Familiar pattern, short-term patterns, opposite of those intermediate and long-term patterns. So something's got to give here in gold, and we'll keep an eye on it. As a short-term trader, even intermediate-term trader, you're still on the short side, but I got to caution you, you're right on top of that 50-day support. So the only time really long-term support or resistance is relevant is when you're right on top of it. And brothers and sisters, you are right on top of long-term support in the gold. So that's going to be a cool one to watch too. Last market we're going to cover will be dollar yen. This is a bullish chart. Also, when you look at that secondary pattern, this is a daily chart. So you look at that secondary pattern going all the way back to late summer, you have a pattern of higher lows and a pattern of long-term pattern of higher highs. Anyway, this to me is a pretty bullish chart. When we break down the ratio, though, short-term patterns up, intermediate-term patterns down, long-term patterns up. Guess what? When you look at the big picture, you have the majority of patterns up. I like buying dips in this market. This is a key level in here. What is that? 103, the figure. Friday's high, 103, the figure. If you can get through there, you'll probably take out a long-term trend line here too. So watch 103 the even. If you can get consecutive closes above that on a 4-hour chart, that means buy the dip. Okay, you're still at resistance though. That level's still holding for now. So you're kind of neutral here. This is what we would term a counter trend market, where short-term up, intermediate term down. Okay, so careful in there. However, if you could shift that 25-day, if you can get consecutive closes on a 4-hour above 103 even, you're going to have upside there. So buying dips looking enticing if I can get the big close above 103. Hey, great to be back. Great to see everybody. Let me just leave you with this thought. It is much easier to follow the path the market has laid out for us when we have no opinion. That's so true. Hey, thank you so much, and we'll see you back here next time.